Hello folks, it's Sunday, September 14th, and this is the weekly market analysis video from Craig, the options linebacker. We'll start out this weekend looking at the big caps versus the small caps. So on the left-hand side, I have the Dow 30, and the Dow has, of course, after the June through July downtrend that we had, it's come back up to about the 38% fib, which is a pretty weak bounce so far. But the other thing that we're seeing is that it's not really retesting its lows yet. It's still hanging kind of tough right now and really kind of consolidating in this range right now. So you have to wonder if this thing is just delaying the inevitable of coming down below the 11,000 level and retesting these lows from July. Now looking at the Russell 2000, or the small cap index on the right hand side, things have been much stronger. Not only did this move from June through July get taken back all the way, literally within a couple of weeks, but it's still hanging above its 50% retracement of this move. So we'll get more into the details of this index later, but really so far just showing a bull flag configuration sitting above those fib retracements. So far has been the case for the last few months. The small caps are showing a lot more strength right now, as typically small caps will lead the market out of a bottom. However, you never know if this is just a false top here and this is going to roll over again. Now let's look at the S&P 500 to see where the rest of the market's going. Now when we look at the S&P 500 on, first of all, the monthly chart on the left and then the weekly chart, it's important that we separate fact from fiction. So that's why I'm zooming out and starting on the monthly chart first and saying, what is it telling me? And then we'll kind of zoom in the weekly and then lastly into the daily chart. So if we just look at the monthly chart, everything is still in a big long uptrend. And in fact, this trend line goes back to 1995. So it's still hanging tough here. And this looks like so far just a 38% retracement in the context of a longer bull run. However, if this 38 fails, then the only way I'm going to be really staying bullish, if I go according to Dow theory, is if it stays above the 50% retracement, which coincidentally is 1170. Now why that's important is because if we look at the weekly chart is in this descending channel, and it's going to stay in that descending channel until it no longer is and breaks out above that upper trend line. Now what's important about 1170 is that's about where this lower trend line is at this particular time as we get into the end of September, early October. Now what worries me about the S&P is the March bottom got a nice bounce as we went into mid-May. So that was a good strong bounce up there that got all the way up to 1440 before turning around. Pretty wicked sell-off after that. And look at this bounce here, only came up about 100 points off the bottom and is already rolling over again. Now as we look at the daily chart, what we'll see is that intraday dip all the way down to 1200 that occurred in mid-July, accompanied by the VIX spike, was a good bottom for there. But rarely do these bottoms, even the intraday ones, not go without being at least retested. And that would also line up with that deeper dip or that undercut, maybe down to about 1170, which would be accompanied by a VIX spike, as well as some horrible news usually causing that. Now before we get to the daily chart, there's going to be an awful lot of reasons for the market to move all over the place this week, as if we didn't see enough volatility just last week. So by Sunday night, we'll probably know the results of whether or not Lehman got bailed out or not, as well as we're seeing some problems with AIG now, which is stepping up to the window, the confessional, and just saying, hey, we need help. On Tuesday afternoon, we'll get the FOMC release. So whether or not Bernanke is going to decide to cut or raise rates, very doubtful that he's going to do anything at all. But as always, it's the tone in his message that really sets the precedent for the markets over the next 6 weeks until the next FOMC release comes out. It does always move the market. And then lastly, we have the entire week, quadruple witching week. So we have a lot of manipulation out there pushing the market all the way around. We are going to have a very volatile week. It's going to start tonight, Sunday night at 6 p.m. Eastern. The futures will start trading, and you'll know immediately what the market feels about the results of whether banks were able to acquire Lehman or throw them a lifeline or whatever. Here's a daily chart in the S&P 500. Now, let me caveat everything by saying the market's just going to do what it's going to do. Just because I read technical analysis doesn't mean that I'm going to force fit the market to do something in particular. I'm just sort of standing back and saying, here's the signals that the chart is telling me, regardless of what the news is out there. So I'm not going to let the news bias me into thinking that I should be bearish or bullish on any particular thing, just reading the chart. And so what the chart is telling me is a couple of things here. First of all, is that we have an untested bottom intraday back from the middle of July, July 15th, that got all the way down to SPX 1200. And so far we've tested the closing low at 1214, but not the 1200 intraday low. The second thing I'm seeing is that we've had 1, 2, 3 days in a row to the upside. When was the last time we had 3 days in a row to the upside that stuck? Well, maybe off the bottom here. We'll see whether or not we have additional follow-through on here. But since then, we've rarely had more than a couple of days to upside without it being reversed violently. The third thing to look at here is that we've been in a descending channel. So we've been putting in lower lows and lower highs really for the last couple of weeks. Starting with this lower high up there. So lower high, lower low, lower high, lower low, and the cycle repeats until you start putting in a higher low and then a higher high. So right now we're still bound within this channel to the downside, and the SPX will be in that channel until it tells us that it's breaking out. So when you put all those things together, and also when you look at the weakness of the weekly chart, I'm really going to be surprised if we don't do something to undercut that 1200 level significantly. And those are usually where the best bottoms are made, is when you get a significant undercut of the previous low accompanied by a VIX spike and that general feeling of hopelessness in the market that, oh no, here we go again, here's another run on the banks. Ironically, those times of fear, uncertainty, and doubt in the markets actually make the best opportunities for us as option sellers. Now, while I got this chart up, let me talk about position management for a second. In September, all I have left here is this butterfly, which if the price rolls over again, is going to come right down to the center of my butterfly in expiration week. There's a great chance for me to pull a nice profit on this trade for the month of September. For the month of October, I have this vertical spread up here at SPY 140 with a butterfly protecting it in front of it, kind of like a moat around the castle, and looking to be in very good shape. So unless we have just an absolutely explosive move off the bottom, and even if we do, it's very likely to find itself in the center of the butterfly by October expiration. Time's winding down on this position. We've got less than 5 weeks left. Now looking at the Russell 2000 for a minute, it too is also in this descending channel pattern, putting in lower highs, lower lows. But again, this looks more like a bull flag configuration, and especially if it stays above this 62% fib, is still, I would still expect to see an upside breakout out of this channel at some point. The other thing to watch here too is the 50-day moving average is just about to cross the 200-day. 200 days in green, the 50 is in red, to the upside. And that is actually a longer-term buy signal that we show. So looking at our positions right now for September, we have a topside IWM 79. That looks great. It's got a butterfly in front of it just in case the price gets zippy here in the last week. And we also have an IWM 63 in the bottom with a butterfly in front of it. This one I've got for a 1 cent close, so I would expect to close that position in the next day or two to handle black swan risk management. And since the Russell 2000 is the stronger index, what I've done is I put a downside bull put spread, vertical spread down here at IWM 62 for the month of October with a butterfly in front of that as well as an active defense. So hang on to your hats, folks. It's going to be a wild week, and we'll talk to you next Saturday. Take care.